Hey everybody, it's Pete. Good morning. Thank you so much for joining me today. It is Thursday morning, October 22nd, 2020. And wow, we got a lot to talk about today. We have 18 different stock picks that we're going to review. PayPal is going to be at the top of the list. Really big news yesterday. Does it legitimize cryptocurrency? Does it legitimize Bitcoin in a way that it's now going to start to be expanded? Somebody tipped the boat. It's going to be interesting. And what's super interesting about this too is it actually happened at all-time highs. So that's the stock is probably going to need to absorb this information a little bit. It's absolutely still tradable today, and we'll discuss what that means. We have stocks on both sides of the market today. We have stocks that showed relative strength yesterday to the weakness in the market. We had stocks that showed relative weakness in sync with the markets. In other words, the market went down, they traded down with it. So I guess that's confirmation, right, in the direction of the market. We do not have good trades in what you might call the big market leading tech stocks. We haven't called them out in a while. Facebook gapped yesterday. A couple of other stocks showed some bullish strength, but couldn't really maintain that bid. Tesla obviously had earnings. We're looking at follow through in Netflix and Snap as well today. There's a lot to discuss. We did a video today for Stocks for Breakfast on timing entries into these trades. I think one of the most frustrating parts for traders right now is the market is not absorbing poor timing. The market is not bailing you out if a trade doesn't come back and rocket in your direction. And it's frustrating a lot of smart, hardworking people right now. And that's, look, I'm just going to say it. That's on you. You need to really understand the market conditions and when you can chase price versus when you really need to be dialed in and get that perfect entry. And we discussed that. I'll post the video some over here. If not, just click down and go to Stocks for Breakfast and you'll see it. It's got a yellow background. But look, I'm just going to say it straight up. If you're watching this, that means you have a passion for the markets, but you have to recognize the conditions that you're in. Every market is not the same. Every day is not the same. And the way I talk about it in the boot camp is that one day you're on the road, it's open road and you're doing 80. Next day you're on that same road, same exact time, and it's stop and go and you're getting your head beat in because you don't want to let up on the gas. That's what trading is. But a good trader, which you can be, is you need to pay attention. You need structure. You need to say, okay, stock's gone up 5 days in a row. Maybe I shouldn't buy it today. This might not be the greatest odds of follow through. Or now the stock is strong, pulled back 4 days in a row. Now might be the most perfect time to buy it because now I have a better reward potential for the risk that I have to take. By the way, if you're not in the boot camp and you're struggling, gosh, the investment is so small. Get in there, click that, look below the video. There's going to be a link there. Just go and see how other people are doing. We actually have the wall of success where we have all of the members of the community post what they're achieving and what they're accomplishing. And look, I'm not going to sell you on it. You have to sell yourself. But if you're not getting the results you want right now, something's missing. Just click down, take a look at that, and I think you'll be pleasantly surprised. And you're going to want to join us because the community is just amazing. So we're going to take a look. We're going to start out with PayPal. And this is the news in case you did not happen to see it yesterday. The first sentence here is really the big deal. Allowing customers to hold Bitcoin and other virtual coins in its online wallet, up to the 26 million merchants on its network. Look, this is a really big deal. This is a big deal. I have friends that trade Bitcoin. I don't trade crypto. I'm still waiting for it to become a little bit more mainstream. I've been very clear about that. But this is a big deal, and this story should have legs. And you can see where it happened. Let's go out to the monthly chart so you can see this news coming out at all-time highs. Now, here's the problem. Do you chase the story? No, you don't. You don't chase the story. It's down a little bit today. We need to see this back above the breakout level, which was 215 yesterday. You see it's trading down at 212 and change. So at a minimum today, we need to see today's stock trading above the opening price from today. If you want to get aggressive, you're going to be trading an early entry during the day, which we call an opening range breakout. A little more conservative, you wait for it to take out 215 with the stop being below 210 for a little bit longer term trade. Now, the reason I'm calling it out today, this is not chasing the stock. Yesterday was the first day out of a breakout. Yesterday was the first day breaking out to all-time highs. But you need criteria. This is where I'm talking about. You can't just get long because you want to be long. You need criteria. So whether it's an intraday entry where you're fine-tuning the entry and use yesterday's low as the stop loss, whether it's a swing trade and you use yesterday's low as a stop loss, or whether you're waiting for tomorrow, which would be Friday, you want today's price action to confirm the breakout, which means it's going to be well bid on the daily chart, higher highs and higher lows, which means then you're going to be buying tomorrow on Friday. So Thursday's price action, the most conservative entry, you want to prove, confirm, get feedback from the market where it goes well bid, higher highs, higher lows. So that means that today, Wednesday, is here. And then Thursday's price action, which is actually today, yesterday was Wednesday, today's Thursday. If today goes well bid, higher highs, higher lows, closes strong near the high, that means on Friday you'd enter above today's closing if the price action unfolds that way. What you don't want to see is well offered. What you don't want to see is an inside candlestick. That's not the one to enter on. You want to enter when you get feedback. That's one of the, I keep using that term in the boot camp over and over again, feedback. Let the market tell you what to do. Let the smart money tell you what to do. Don't guess if it's a buy or a short sale. Let the market tell you, and then find a spot to time that entry and get into the trade. So it's a pretty detailed analysis. There's 3 different types of entries. The most conservative, letting today finish and get feedback from the market to prove that you're getting follow through. Tesla, the big story from yesterday. Obviously, earnings came out. It's trading up pretty well right now. It was only up about $11 after the announcement. It's kind of fluctuating. You can see now it's at 446, which is still in the middle of this trading range. So Tesla will go well bid today, just in the fact that it's going to open higher outside of yesterday's range. The question is, can it hold that? Can it stay above the opening price? If you're a day trader of Tesla, which this does not have long-term order flow right now that screams being bullish and holding on to this thing, again, get a little bit of feedback. For me right now, it needs to break 460 before I'm looking at a longer term play. Will I be looking to day trade this today? Yes, as long as it's above the opening price. It confirms the earnings report yesterday, and new buyers are coming in. New buyers are supporting the stock. And then if and when it gets over 460, I'll talk about some a little bit longer term position trades, but you don't want to get involved in that noise and assuming it's going to break through there. Let it get through there. Very similar to what we've seen in Apple, where it got through there and did not stay. It's pretty clear. Look at the box. This is the box that we're drawing. We kind of have this mental box, and same thing in Tesla. It got above there and came right back into that box. That's where you need confirmation. You can see it went well bid right out of the box, and that's kind of what we're looking for right here, where the breakout went well bid, higher highs and higher lows. That's a good example there. But it stayed there for one day and then reversed and came right back into the box. It didn't follow through. It didn't stay there. So you could have taken the trade. You would have been nicely positioned for that long, probably watched it pull back a little bit and gotten out on the break even. But my point is, whether it follows through or not, that's not up to us. Whether we take the right trade with the highest probability, that's absolutely up to us. So Netflix as well. Netflix is going to be very active today as well. We outlined a really clean strategy to trade Netflix yesterday. The bottom line in this is the earnings weren't good. It wasn't what everybody expected. Subscriber growth was down. But from us, as active traders, we are looking to trade this stock with passion, as long as it meets the criteria. Because look, we want volatility, we want volume, we want attention. It's just, again, you need that structure to know, should I be buying it right now? Should I be short selling it right now? And this trade right now is off the board as a longer term swing trade. I'm not looking to swing trade it. I'm looking to actively day trade it, because I'm not looking to trade against the earnings that were disappointing. If the market gives me feedback, it goes well bid and starts to turn around, maybe, but then you can even take a look and see, like, where is the edge in this stock right now? Where is it? Where is the edge? If you start to really get into the price action, it's stuck here. Now, can you make the argument you could trade this back and forth within this window? Yeah, you could make that argument, but is that trading order flow? No, you're trading a stock that's stuck nowhere, and you're hoping support comes back in. Support is an area to manage risk. Support is not a trading strategy. I want to get that clear. A lot of people don't understand that. Just because you saw support there, that means you're managing your downside. But managing your downside does not mean expectation for follow through in your direction. Very, very big difference. So I want to make it clear, I'm not looking to initiate a swing trade here. Snap, we're looking for it to pull back and pause. Obviously, a monster move yesterday. Got some really good follow through after the market opened. Let's just give you a quick look at that. We didn't expect that in Snap. However, if you've been a student of the market for the last 6 months, you have seen CRM, Target, these stocks that have the earnings and just exploding the day of the earnings and becoming very tradable. This stock is most likely going to pause for the next 3 to 5 days. Then we'll look for another entry. So I want to be clear in this. We're not looking to initiate a new trade. And again, this is what I talked about this morning about fine-tuning those entries. You do not want to chase a stock that has now gone massively further than what it normally does, because what's the reward potential over the next 3 to 10 days? Remember, yeah, that risk reward has to be in line for you to accept risk. If you're taking trades that are one-to-one risk reward, that makes you a break-even trader, which that's not where you want to be. You want to be a profitable trader. So we also have initial claims today, which is a big deal. Coke has earnings scheduled prior to the market open, Intel and Capital One after the market. Twitter, my gosh, have you seen Twitter? Look at this trade. really clean breakthrough. When's the last time we said, look at that breakout in Twitter? I mean, we're actually at some levels that the stock hasn't seen in a long, long time. We are looking for follow through today. And again, we're looking for the minimum of the stock going well bid if you're looking to initiate a new swing trade in the stock today, which means it needs to be above yesterday's high, with yesterday's low being the stop loss. CAR is an interesting one. CAR is setting up as a trade where I am not looking to buy it. This is exact situation where I say, if you're looking to chase price or you're not getting the best entry, you're not looking at the right time into the stock. Right now, it's 1, 2, 3, 4, right? 1, 2, 3, 4, 5 days in a row positive. If you buy a higher opening in the stock, the odds are the stock's going to pull back on you. This is where I'm talking about. Don't buy too late. Wait for a pause. If the stock opens higher and pushes higher, that's a profit-taking scenario. That is not a scenario to add or start a new position. We need for it to pause, pull back for a day or two, and then look to initiate a new trade. But I wanted to point that out. We do have some entries that are timing perfectly right now. We're looking for a well-bid candlestick in Match.com above 118. So that means today needs to form. SFIX, I want to point out SFIX, and I want to point out Chewy. SFIX here, again, being very clear, this is the well-bid entry outside of the breakout, so you understand what that means clearly. We are now looking to move up our trailing stop because this was a swing trade, so we're looking to move up our trailing stop in this and take some profits. I want to point out Chewy. We actually had a discussion about this in the boot camp the other day. When we got long Chewy down here, we clearly said 70 was the target, and I was sticking to that target. Somebody in the community yesterday asked me, should we hold it? Can we get in more? And I said, no, I don't want to. That was my target, and now you can see the stock has pulled back almost $6. You're giving back $6 in profits because you're not staying true to your targets. I'm not looking for this trade right now. I am looking for this to get above 70 for my next trade. But I wanted to point that out. You need to stick to your targets. Some other trades that we have on tap today. We have Nike closing at or near all-time highs again. So what's the trade here? It's kind of in this box right now. I'm looking for it to get above 132 for me to initiate a new trade here as well. WRK actually paused for a couple of days here. Now we have a nice bullish gap. 4 days after the gap, we're looking for a breakout above 41 in WRK right now. CAT, which has been a very good day trade stock, very similar to the setup that we just looked at in WRK. Again, a gap, 4 days holding the gap. We're looking for follow through here as well. Square is actually going to set up a trade that we're going to talk about with a few stocks over the next couple of minutes, which is a strong stock that pulls back. The big question we get is, what is the entry? The minimum entry you want in the stock is that it needs to be above yesterday's low. That's it. If it trades below yesterday's low, trades back above, that's the entry. So in these strong stocks that pull back and close weak, you need them to be above yesterday's low, again, to get feedback from the market that you're looking to enter it. What else do we got? What else? Net, very similar setup, right? Strong stock pulled back. If the stock opens lower or tests yesterday's low, that's where we're looking for support. And if feedback comes back from the market, again, get feedback, get feedback. Don't guess, get feedback. Trades back above it, you're looking for that entry there. Twillo, we're going to rattle these off now because very similar situation that we just talked about. Twillo, strong stock, pulling back from all-time highs. Now 2 days well offered. We're actually looking for this stock to open lower, push lower, and then find a spot to buy. It's a little different trade because the other one was only 1 day. We're looking for 2 days here. OMI is another one. OMI actually consolidating now within a 2-day period. The trade in OMI today is a breakout above yesterday's high, and the stop loss is yesterday's low. And we have three interesting stocks that showed relative strength yesterday. Teradyne, BEKE, again, relative strength to the market closing week, and BIGC, which a few members initiated a new swing trade yesterday. If you did not take the swing trade in BEKE yesterday, it is a breakout of yesterday's inside candlestick. So again, that's fine tuning the entries. There's going to be a good entry there in BEKE today, as well as BIGC. So we got some relative strength, some weakness, strong stocks closing on the lows. We got a lot to digest today. Stocks with earnings that are giving us some good volume, volatility, and active day trading opportunities. Remember, you need to fine tune those entries for day trading. We give them in the boot camp. We have a really good, deep conversation every day about which stocks meet the criteria right now. And that's what makes it exciting. And here's really the key. That's how you can stay patient, because unless it meets the criteria, you're not looking for entries. It's when you have no criteria that you're all over the place and you're like, my gosh, trading is so hard. It's not hard to understand what to do. What's hard is sticking to the rules, and that's on you. So let's do that together. Have a great day.